This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here for today with us. I am Cesar Delgado on today. The state fair is over and the county fair is fair for this summer, especially with the livestock judging by 4-H. Otherwise, this week is the crop tour for Illinois, Iowa, Minnesota, Nebraska, South Dakota, and Ohio. We are watching about the yields trends in the field. However, the yield trends in the world supply and demand report from last week, the yield is higher than expected, but traders are not satisfied with the 188. We'll see what's happening with these crop tours for this week. Next week will be the Farm Progress Show indicator. Meantime, that week can join us in the Farm Progress Show on Tuesday and Wednesday of next week with Brian Basing from Advanced Trading. And on Wednesday, we have Connor Bridgman with agmarkets.net and Bruce Blythe from Farm Futures for our panel on the Markets Club podcast for Wednesday at the Farm Progress Indicator. I'm going to talk about the commodities markets with this crop report from last week. However, farmers are concerned about this report. I'm asking about it with Tyler Shau from agmarkets.net. And I'm taking a time to talk about the cattle markets with Lee Schult from Everag. You've been listening to Back Roads of Illinois. I'm taking a time to talk about the cattle markets with Lee Schult from Everag. Lee, how are you?
I'm doing great. Glad to be back on the show again.
Great to hear that. All right, Lee, what is on your list of the cattle markets with these prices?
Well, I think it's twofold. It's one is, how much higher can we push these prices? We've seen when you look at fed cattle prices here, the second quarter of 2025 are up 20% compared to the second quarter of 2024. And we're looking for further price appreciation in the third and fourth quarters. I mean, my forecast would have them up roughly 25%. That would give us about a 237 per hundredweight average on a live weight basis for the third quarter, and just under that at probably about 234 for the fourth quarter. And then, 2026, it looks like prices could be overall, stronger, maybe up about 4%. So, this price escalation is still, I think, in front of us some, maybe not at the speed that we've seen it so far, but realizing, we're likely to continue to push these prices higher. I'd say it's similarly for the calf and feeder cattle market, where we could see, upwards of 30% increase here for the next several months as we even get into, more supplies being available seasonally here. I like to remind producers, this is the point of maximum financial risk is when we are at these contract highs and price heights. That's the important time to really look at the risk. From a placement standpoint or from where these calf prices will be for cow-calf producers, and realizing that, there's a lot of reasons to manage some of that downward price risk.
I saw the feeder cattle for today's market is 355. Do you have any questions about these prices for right now?
Well, I think, it's realizing that these supplies are as tight as they've ever been from our feeder cattle supply standpoint. And so, my question is, will cattle feeders be willing and able to continue to pay these higher and higher prices? Because when we look at it from a crush margin standpoint, these prices aren't currently penciling in. And so I think there's a lot of betting on the come, so to speak. When we think about cattle markets, that we will maybe see prices continue to increase or costs decrease. And that's why cattle feeders have been willing to pay these higher prices to keep their lots relatively full.
How about supply, Lee?
Well, our supply numbers, I mean, I think when you look at it, cattle numbers have been tighter than beef production. And why that's been the case is, we've somewhat mitigated the impact on beef production so far by feeding to heavier weights. And that's kind of necessitated longer days on feed. We've also, continued to put heifers into feedlots, and so that's again mitigated some of that supply impact when we look at it from a beef production. Realizing though that at some point we're really going to have to tighten up this supply as we start to rebuild this herd, pull some of those heifers out of what would be kind of the feedlot sector and into the reproductive chain, and that will tighten up supplies even more.
We know about you. SDA numbers were high on the corn yield from the World Supply and Demand Report. What is your thoughts about the corn yield on feeds?
Well, as we look at, this being a bumper crop, I think, just the question is how large is this crop going to be? And a little bit of the timing of it, realizing last year was kind of about the best conditions we could have had from a harvest standpoint. Realizing that it's a big crop, but it's in the field right now. And so, that could cause some, if we do have some challenges with moisture and things this fall, that could have some impact short term, I think, on the markets and feed prices. But overall, we're expecting, feed prices lower, corn prices, USDA right now from looking at the season average price for 2025-26 would be about down 9% from where they were in 24-25 crop year. That, suggests that, we're going to have, more price or more corn available for feeding. USDA did increase their feed and residual category up to 6.1 million or 6,100 million bushels. That is up 7% from where they were last crop year. And so I think, that's going to provide, again, feeders the opportunity to continue to, feed to these heavier weights. I will remind us, though, as we think about, some of those relationships, as you see lower corn prices, that increases prices for calves and feeder cattle because it's less expensive to feed them. So as we talked about some of those prices for feeder cattle and some of the forecasts, cheaper feed is even going to provide more support to those prices. And I think that's really what the outlook is for the feed market.
Does producer are concerned about the feed for this fall apart from the corn markets?
I think overall, I mean, there's a couple of ways to look at it. So if you look at feed costs, they are still almost 50% higher than they were back in 2020. And that's not really a feed ingredient. So when you look at it from a feed cost standpoint, those are lower, but the cost of everything else has increased at or above the rate of inflation. And so what I've like to remind folks is I think we've squeezed really all we can out of these production costs now. Even at these lower commodity ingredient prices, I don't think prices are going that much lower. So when you look at the outlook, I mean, this is kind of the cards we are dealt from a cost standpoint. And ultimately now, I think we can manage around some of that if we do see, some spikes in prices, if there's some challenges around harvest, and things like that. But overall, I think, what's going to be a real driver of our margins is the revenue side of things.
Do you have any final thoughts about the feeder cattle?
My final thoughts would be to look ahead here to the cattle on feed report that is expected out here on Friday, August 22nd. That'll give our cattle on feed numbers for on feed as of August 1, and then the placements and marketings for July here. I think as we look at overall, there's expectations that we're going to see lower inventory numbers year over year. The placement number continues to be, have a wide range from an expectation standpoint. That was the big surprise in last month's report. Those placement numbers were much smaller than pre-report expectations and smaller than a year ago. And so as we look at, numbers placed in July, I think the average of pre-report expectations were down about 8.8%. That's quite a bit down year over year. If we see it even further down, I think that would be even more supportive of these markets. We did have similar business days of July this year versus July last year. So we will be comparing apples to apples overall. And I think, this report, if anything, will continue to confirm those overall tight supplies, both in cattle on feed currently, but also kind of those numbers that are coming into feedlots and those placement numbers. So overall, I continue to be bullish on the feeder cattle as well as the fed cattle market.
Where people can find you for your consulting services for their livestock markets, Lee.
Yes, please feel free to reach out. At Everag, we're always, interested in learning about producers' needs from their risk management and technology standpoint.
Thanks, Lee.
Thank you.
This is Lee Schult from Everett on back roads of Illinois. I'm going to talk about the commodities markets with this crop report from last week. However, farmers are concerned about this report. I am asking about it with Tyler Shau from agmarkets.net. Hey, Tyler, how are you? And a happy Crop Tours days.
We're doing good. Yeah. Big crop tour days. We're learning a little bit more about what's going on out in the field. Always good to get boots on the ground and hear what they're seeing, find out what they're seeing, and get a little better idea. It's kind of the first objective data. Everything we've gotten so far has been subjective, so just kind of what's it sort of look like. Now we're getting some objective yield data. So good information. Hopefully we learn something.
Of course, it's pretty tricky than last week. Tyler, let's take a moment to talk about the numbers for this report. And farmers are concerned about the report because the yield is higher to 188. What is your thoughts on that number?
I mean, my thoughts on that number was it is high. I mean, you're talking a almost 9 bushel or over 9 bushel yield per acre yield over the highest on record, which was last year at 179. So it's a really high bar. I'm not going to say it can't be done. I mean, I've got some customers that would get angry with me for saying that, and I'm sure some listeners might not like hearing that. But if you think about it, the last few years, 23, 24, we've had some pretty dry years. A lot of my customers tell me all the time, when you get into the I states, tiles weren't running. Um, and yet, in those dry conditions, we still produce big yields. And one of the comments that got made multiple times was, imagine if we ever get a year where it rains. And we got that this year. It rained. Not only did we get timely rains, we got a lot of timely rains. And you can make the case in some areas, too much rain. We're hearing some disease pressures, tar spot, southern rust in corn, hearing more and more sudden death syndrome in soybeans. Those are obviously concerns. They are things we're monitoring. But at the end of the day, even with all those concerns, you're still seeing large yield estimates come out of these crop tours. And that's not just the Pro Farmer Crop Tour. We're hearing from local co-op tours. It's been hard to find any where we're not hearing, some big yield information. And so, from that perspective, yeah, farmers aren't happy with the numbers. It's a really poor year. All year we've had high input costs, and it's never felt like the prices were high enough that justified making sales. And now you've got producers sitting on large inventories or what appear to be large inventories, and all the prices done has got worse. So it's been a difficult year to market because of that combination of factors. Um, and we'll just have to see how it goes from here on out. Remember, last year in August, we had a 183, 184 yield from the USDA, I believe. And the Pro Farmer Tour came out and was along the same lines. I think maybe even a little bit higher. I haven't brushed up exactly on where they were last year here recently. And what we found out in January was the yield was quite a bit lower. So there's still growing season beyond this point. It's just an estimate given where the crop is right now. That's what they're seeing. That's what we hear. It can change. It's not written in stone. So we'll kind of have to see.
Everyone is having a disagreement about this crop tours, but do you have any thoughts about this crop tours, Tyler?
There's always going to be disagreements. I I try not to get too focused on a lot of these tours, even WASDE USDA numbers. I realize that we have to pay attention to them. It's data the market's going to digest. But at the end of the day, the job of the producer and my job is to identify areas where we should be aggressive hedgers. And it shouldn't be dependent on what a crop tour says or what the USDA says. So we've had a few opportunities throughout this year to get some of those positions on. I would love to tell you that I feel really good about our corn and bean marketing program this year. I can't. We thought maybe we'd get a few more opportunities than we did, and that largely comes down to it just rained every time they said it was going to rain. It just seemed like we never missed on a rain. That's not normal in a year, and that's not a cop out for maybe not being aggressive enough hedging. But it is, I mean, that's the truth. We kind of thought maybe we'd get a few more price spikes than what we did. So yeah, we wish we could go back and maybe be a little more aggressive in the past. But at the end of the day, we got to deal with what's in front of us.
Yes. Everybody else gets mad about it, but being in the field with the weather and weeds.
Yeah, just got to take what you get.
How about the technical side in the feeder cattle for right now? We seeing some pulling back in the cattle markets.
I mean, it's been on a roll. We kind of been in a cycle where we have several up days, strong up days, and then we get blasted by a limit down move or a fairly sizable move down. Um, the 10-day moving average on the technical side has seem to be awfully good support. We've traded through it, but we haven't closed below it very many times. That 10-day on like your November feeders right now comes in at 344 and we're at 356. So you can see a $12 pullback, which is greater than a limit move on a daily move. You can see a $12 pullback in a couple days and still be at support. $12 is a big move, just not that big of a move when you're at $350 feeder cattle. So from a technical standpoint, there's no getting out of the way of the bull train. At some point, something's going to pop up and maybe put this market in check a little bit. But fundamentally, I'll be right on. It's like still make a case for higher priced feeder calves as long as the fat price stays where it's at and feed stays cheap. Those two ingredients just lead to a very friendly marketplace for the feeder calf.
Do you have any updates on the Packers bids?
What I saw last or this morning, they hadn't really pushed up much higher. I saw um, some dressed at 385, which, compared to what the board was doing, seemed a little surprising that they were offering that they hadn't bumped their offers up any more than what they have. Haven't heard just a lot of news on the cash market side. So I can tell you I did get a report. El Reno, Oklahoma City had 10 to 18 higher on feeder cattle. So it's just not slowing down.
Sure. Do you have any final thoughts on the current crop condition?
I mean that I would just echo what we're hearing. Crops look good. Yes, there are going to be some areas dealing with some disease. There are going to be some areas dealing with too much rain. Um, but at the end of the day, I don't think it's enough yet to substantially pull this crop down from where the expectations are.
Thanks, Tyler.
You bet. Always good to visit with you, Cesar.
This is Tyler Shau from agmarkets.net on back roads of Illinois.